Okay, let's welcome our guest on the show today. Joining us today is Shahina Mukaddam, who is an independent market expert, and Avinash Gorakshakar of Profitmart Securities. Many thanks to both of my guests. On the show today, we discuss the results from Dr.Reddy's. It was an operationally strong quarter despite a 570 crore loss, and that was due to a one-time impairment. We discussed the strong quarterly performance for HDFC. What does it mean? We asked our analyst about one company whose earnings surprised them on the positive side or the negative side, and we discussed the possible opportunities from the drop in crude oil prices. The first one, Dr.Reddy's very strong set of numbers across the board. There was growth. Okay, what's your sense on the results?
No, I think Darshan, very strong operating metric numbers. I think a very strong growth on the operating profit of almost 24%, and across geographies I think the top line was quite solid. Our sense is that the markets would obviously look at the fact that going forward how would the US markets perform. I think in the management call the management was pretty cautious on the US markets, but other markets they were pretty confident that growth would continue. And as China mentioned, valuations don't appear to be very cheap. I think the stock has run up, so probably one could possibly look at this stock from a longer term perspective only on some declines. But yes, given the kind of numbers which have come out, the EBITDA margin expansion and the kind of growth in the geographies, especially Europe, US and India, I think definitely this could be a good stock in the portfolio for a longer term horizon.
What does this mean because of seeing these numbers? Obviously Torrent disappointed because it has issues of its own.
Yeah.
But you think that the market's confidence in the next pharma earnings that probably will come in will improve?
My guess is I think it would be a case-to-case stock specific approach, but I think overall numbers from the pharma sector would definitely improve, apart from the fact that if there are no negative surprises like some exceptionals which come in the numbers. But overall I think considering the second quarter numbers, the third quarter number in terms of top line growth, in terms of margins, and especially companies which export to the US would definitely be I think in the limelight, and I think clearly one should see a better year for FY21 also.
Okay, that's the view that's coming in on Dr.Reddy's. The next one is HDFC, which came out with a very strong set of numbers. Nothing much to complain about. What did you make of the numbers, Avinash? Anything to complain?
No, I think in line, Darshan. I think the only glitch was a slight increase in asset quality. But I think looking at the kind of loan book growth of 16% for the retail side and the management focus on the affordable housing segment, our sense is that this number definitely appears to be very solid in a very challenging macro environment like this. And going forward, I think these kind of steady numbers and asset quality levels should be maintained for the next coming year also. I think probably what the budget announces for affordable housing could possibly act as a near-term kind of sentiment driver, but definitely amongst the best housing finance stocks. Probably one could look at buying at slightly lower valuations rather than currently buying, which appears a little bit stretched.
Obviously valuations are on the higher side, but if someone wants to play the housing finance theme, is HDFC the best pick, or would you like something else?
I would believe housing finance definitely is a very volatile space, and looking at the kind of asset quality stress, housing finance would definitely, I think HDFC would be a better bet. There are other players, but I would believe that looking at the kind of asset quality and the management kind of bandwidth, this definitely is a stock which can give a decent return over the next say 12 to 18 months.
Okay, that's the Avinash, which is that number that surprised you?
No, in fact, on the positive side, Darshan, I think Indigo came out with their numbers yesterday. I think numbers were much better than what the street expected, and I think on the bottom line, I think that was one positive surprise which took almost every analyst in the market to a surprise. The top line growth was pretty strong, 25%. EBITDA was up by almost 17%. I think the management has attributed that this was largely because of better passenger load utilization. But overall, if you see the kind of commentary which has come in post the Q3 numbers, I think they have been pretty cautious that how would growth pan out in the month of February, and plus with the coronavirus now out, it seems that possibly the Jan to March quarter could be a slightly tepid quarter. But I think I would definitely look at the stock closely, considering the fact that crude prices have come off quite significantly, and that is one factor which would obviously play positively for most of the airline companies, including Indigo. Okay,
Indigo is something that Avinash likes at this point of time. And finally, obviously staying with Aviation, which could be one of the key beneficiaries. Crude has come down almost 15% from the recent highs. We're asking any stock that probably could be a crude play according to them. Avinash, anything that you think that deserves mention because of the crude drop?
No, I think clearly, B2C players like paint companies, I think we are pretty positive on both Asian Paints as well as Berger Paints. Our sense is that already in the Q2, the commodity prices were down, so they could manage a decent margin increase. With this kind of drop in crude price, hopefully, if the volume growth perks up both in the residential and the auto segment, we could see better numbers coming out for FY21. And I'm quite hopeful that, Asian Paints is a company which actually has a very strong cost control kind of management. So obviously, one could definitely look at Asian Paints on every drop. The same thing applies for Berger. I think within the given scenario, Berger also looks to be a decent kind of buy, but obviously, at lower valuations.
Okay, so paint companies are something that probably will benefit according to Avinash. Okay, that's the view that's coming in. Paint companies and aviation companies are something that's been spoken about. But with that, it's a wrap on today's edition of Hot Money. Let me thank my guests, Avinash and Shaina. Thank you so much for coming in today. Ask BQ comes up next. Stay tuned to BloombergQuint.